And the shares, I know I have a brilliant guy in Toronto, is a legend, John Embry, who's made a fortune trading the gold silver markets as a bank analyst, Royal Bank of Canada. He thinks this is the best buying opportunity for the gold silver shares he's ever seen in his whole life, and he's older than I am.
So, hi everybody, this is Markonomics 101. Welcome back. We're presenting another show of Hoot Loot, the place where you go to be informed, be amused, but never be misled. I know you're wondering why the hell I'm wearing these glasses, and these are protective glasses against the absolute toxicity of cable news and what it does to your mental health. But right now, I will sacrifice my life for you guys, and so I don't even need them. All right, now, a couple announcements. The show is called Bill Murphy and More. For those of you that don't necessarily, weren't really understanding every part of what he was saying, because he is an authority, and I'm catering to younger people who are novices, so we are going to give you clips of what Bill said, backed up by certain facts that back it up, and facts that back it up. So, but the announcement I want to make right now is this. The promotion, okay? Last week, we told you about the promotion, but we're going to actually sweeten it to death right now, okay? Bill has an organization called GATA, GATA.org, www.gata.org. It's a donation site. You can get a free newsletter off there, which is really valuable, really helpful, and it comes full of news every day, okay? And it's something that you can get for free no matter what, okay? But in addition to the promo, and the promo was structured like this. If you're a subscriber, Bill has a 2-week free subscription, all right? If you're a subscriber of his and a subscriber of ours, we're going to have a drawing in about 3 weeks or so for two people that are going to win that drawing. And they will get it for free. We'll pick up the rest of your cost, okay? Now, we're also going to do something else. Because of the GATA organization, again, www.gata.org, what we're going to do is we're going to match anybody who wants to donate to that particular cause. And you don't have to pay a dime, by the way. It's completely free. It's a great newsletter, and you can get almost everything for an incredibly low cost. What's lower than zero? But what we're going to do is this. If you want to get it, you can just get it for free, okay? But if you donate to gata.org, and there's a place to donate there, we'll match your donation, number one, and the donation will be matched in a way that also will get you a discount to the price. So if, for example, you don't win the drawing and you're not willing to pay the already discounted amount, I shook him down like you wouldn't believe. I held him upside down over a balcony practically, and he wouldn't cave, but he will. He's such a good guy. But if you donate, we'll match it, and you have to be a subscriber though to get that of ours. But if you donate, we'll match the amount, and we'll also make sure that whatever the cost is, it will be that amount less to you. So we'll match it, and we'll give you that less of a price on subscriptions up to $1,000. So I'm going to put my money where my mouth is and tell you this is going to be a great deal for everybody. And we are just delighted to have somebody of his caliber available at a reasonable cost, very reasonable, to a lot more people, because there are some things that, when we get up in age, like me, you kind of learn a few things in life, like how many times you made the same mistake over and over. So with that, I'd like to say, please like and subscribe, and right down here, and we will see you in just a minute with the charts. All right, welcome back, everybody. I'm going to start off with what I think is one of the charts of the year about Bitcoin and gold. And you'll notice we showed this last week. We didn't talk about it as much as I wanted to, but look at this chart. Bitcoin topped exactly as gold bottomed. And there's something to that that is more than coincidental, because all of a sudden people are, yeah, you hear a few people out there going, yeah, it's a good time to buy, wait to buy the dip. But I'm going to tell you this right now, you might as well own this, okay? This at a casino is at least worth something, okay? Yeah, Bitcoin is a password, basically. That's all it is. And there's nothing to it. It is a zero. And the Bitcoin mysteries that we talked about last week and the weeks before that, actually not last week, but we talked about Bitcoin mysteries and a whole bunch of stuff involving it. I'm telling you, no one has yet been able to come up with information that says, oh, you're wrong because. As a matter of fact, every time I ask somebody about it who owns it, they don't know any of this stuff. And you wonder, are people just buying this thing because everybody else is buying this thing? It's hip to do. That's it. Because all you get is a bunch of passwords. And the other thing that's really weird, and I still don't know why anybody would want to do this, except someone that we all know and love and pay taxes to, is why would you not have a password retrieval system? There's no business reason for that. No one I know of can come up with one. So basically, if you've lost that password, you're SOL, all right? And that's not really good. You may make a fortune in it, but if you can't get your password back and someone has access to your password, it's not very good. Okay? So with that, we're going to move on to the next one. But that is important. So Dow Jones Industrial Average, I'm going to cover a couple indexes just for the hell of it. Still, doing its ascending wedge thing. I think this has a little ways to go, and I didn't go ding ding on this one, as you recall. I went ding ding on this one, which is the Nasdaq 100. It is curling over, and something funny is happening too. Something that I haven't talked about yet, but will in the not too distant future because other things have come up. But what we're seeing is a market fracturize, and some things are going one way, some things are going another way, and that means that we have non-uniformity in the market. And when you have that, when you have just as many stocks making new highs as new lows while you're at a top, that tells you the new leadership on the downside is starting to assert itself. And that's what a Hindenburg omen basically means, that you have a large number of new highs, a large number of new lows at the same time. The importance of a Hindenburg omen is this: they increase the odds of a crash, a waterfall, a top by something like 100%. They're like they triple the odds of that occurring because it only occurs at a top typically. And so it's something we're keeping an eye on. We'll explain it more to you a little later. But what it means again is that some companies are making new highs, while the same number of companies are making new lows, while the averages are making new highs. So there are companies that are just acting uglier than hell, and one of them is, of course, one of my favorites, Tesla.
Why has gold been going down the entire time while the dollar's been going down the entire time? Inflation isn't soaring the entire time, and metals are soaring the entire time.
Yeah, well, it's back afterwards, or whatever you like to say. It's really been something else. I've been doing this now for 22 years in the gold and silver markets, and I've never seen anything so frustrating and aggravating in all my life. Simply put, you've got the U.S. government backed by the Fed Bank and other bullion banks in the U.S., the Bank for International Settlements, and other central banks, keeping gold and silver prices down to reflect from exactly what you're just talking about, the biggest inflationary push of all time, government budgets going bananas, deficits going bananas. It's really been something else. I don't think I've ever been so frustrated because gold and silver should be, and I think they're going to do it shortly, should be exploding anytime soon.
Okay, now one of the things we talked about with Bill was the dollar, inflation. There's the Bureau, the BIS, which is the Bureau of International Settlements, and that's a really important thing. Okay, here's why. At the end of June, Okay, there is a plan that's going into effect that is going to eliminate paper gold as a consideration. In other words, banks can no longer pretend that they hold paper gold because it's not really gold. It's actually phantom gold, mythical gold, or as they call it, a bit. The word for it is non-gold. And we're going to talk a little bit about paper gold today and some of the risks of it. And I've got to admit, I have recommended some in the past, but they were behaving okay. The problem is with that kind of stuff is that you've got all sorts of manipulation of the market, and inflation is a huge deal, and we're going to show you that in a minute. And that's another reason why Bill calls it the best buying opportunity in 50 years. The interest rates in it do not reflect inflation at all, and inflation rates don't reflect inflation at all. But we want to show you some inflation numbers. One of them here is the dollar, which is every time it goes down, that is inflation by definition. And it's about to break a very important support level. You can't just keep throwing dollars all around and expect them to maintain their value. And it's really unexpected that when you have something in limited supply like gold and something in unlimited supply like the US dollar, which is an unlimited supply, that you can have gold go down against the dollar. It is just preposterous. It is just ridiculous. And we're going to show you again with inflation some of the indicators of it that we've shown you over the last few years, over the last mile. Time flies when you're having fun, right? Anyway, we're always having fun. I love doing this. I gotta tell you, there's nothing I'd rather do than this show. This is the funnest thing I can do, and I know that there are people that benefit from it because some of you are telling me, and it is just great to hear from you. So in any event, this is the US dollar. Here's the CRB index of commodities that has doubled in a year. The Fed has said transitory inflation. I don't think so. This is just too much inflation pressure on everything that it's going to filter its way through the system. It already is, actually. It already is. You're seeing it. You're seeing it. The Fed's lying about it. You're seeing it. Okay? The Fed has every reason to lie about it, by the way, because once you understand that inflation is running at like 10% or 8% or whatever it is, all of a sudden people want pay raises. They hoard things. They act in different ways. It changes their behavior so that it becomes a spiral, and it's really hard to stop. Okay, copper miners, what do I need to say here? Up 800% in a year. The cost of building a house, I mean, it's really actually worth stripping out the plumbing of a house, if it's abandoned, and it's done all the time. I was joking before about The Sopranos. There was an episode where they actually stripped the copper piping from one of their homes that was in the hood or whatever. It was just sort of abandoned, and they stripped it of all its copper, and turned out they made some good money. That was before it went up 800%. Okay. Lumber, here's another one that I've talked to a couple of builders, and they cannot finish their projects. Okay, so there are a lot of houses that are like 3/4 done, except they can't afford to finish their projects. And that's why you saw such an incredible run up in it. Well, as I've said before, that when something is in a bull market, one of the ways to tell is that you have things like outside days. And lumber yesterday had an outside day, meaning that it kind of went below the trend line, but it closed above its prior day's high after hitting a low that was lower than the prior days. In other words, the lower day looks like this, the bar is about like this, the higher day like this. So that's called an outside day. When the reversal is toward the upside, it's a good sign, especially when you've had a very sharp break in a bull market. And it's another thing I will throw in here. Bull markets have the sharpest bull market rallies along the way. If you look at the stock market, the biggest percentage gains occur during days where they're in sort of waterfall mode, and you have a 10%, or not 10, but you have an 8, a 6, a 7, and it looks like the market's coming back, but it's just too much pressure on the downside. It has a little bit of a spring effect or rubber band effect. Crude oil, this thing's going up again. what a surprise. This is one of the biggest components of the CRB, one of the smallest components of the CPI, the Consumer Price Index. Apparently, Mr. Powell, who is the chairman of the Fed, doesn't recognize this as a cost because it's reported X food and energy, but it's also reported X pretty much housing. Housing is considered sort of well, we don't need homes. We're all homeless. Basically, that's the way it's calculated. There's a guy named John Williams who has a site called shadowstats.com. I hope to have him on in the future, and he's going to explain some of this to you. It started, decades ago when presidents started to use the CPI and government stats as a way to get reelected. Okay, so what they did was they changed the way of calculating things and to get better numbers. The CPI is 2%. Do you know anything that costs 2% more this year than last year? I don't. Everything's 10% more, at least, when you take everything into account.
What do you think of the current rate environment? I mean, 1.75 or 1.7 for the 10-year bond and a little over 2 for the 30-year bond while inflation's running what?
Well, I have to laugh because sometimes when gold gets down and what I call the gold cartel takes the price down, somebody will point to the interest rate market, a yield of the 10-year note, or somebody say, geez, well, it went up 3 or 4 points. You got to be kidding me.
Yeah.
In the 1980, when gold went bananas, interest rates went to 20%, not going up, not even close to 2%. So it's really something, and it makes gold and silver that much more valuable.
Bill and I also talked about interest rates and why they could possibly be so low, and he's just as baffled as I am. But again, the Federal Reserve runs basically what they do is not what the original mission was. The original mission was monetary stability. Okay, it was not to keep rates ultra low. The reason they keep rates ultra low is because low rates cause higher asset values. And the people in Congress just so happens that they own a lot of stocks in real estate. So the lower the rates go, the better it is. And when you do it for 10 years, 10 years, which is what they did, you start financing projects with a lower hurdle rate. And so money gets misallocated into the dumbest things. And as you know, the government is probably the worst spender of money ever that I've ever seen. But paying people not to work, that's just brilliant economics. Please, folks in Congress, please take an economics class. I beg of you, okay? Please. Because supply and demand, you pay somebody not to do something, they won't do it. You pay them to do something, they will do it. Like, for example, if you guys pay me to put on a show, I won't accept it, but I'll still put on the show anyway. But you could pay me if you wanted to. I always take donations. 30-year treasuries also. These have so much higher to go, it's not funny. I asked Bill, who in their right minds would actually lend the government money at 2% when inflation's running at 10 and they're losing 8% a year? Well, the reason is they're fooled, they're misled, just like cable TV does, and which I can't watch, which I need those glasses for, and it's a leading cause of mental illness, and they push that kind of narrative. Oh yeah, we're at 2% inflation, and et cetera, et cetera, et cetera. And the new argument is it's transitory, meaning that it just is going to go for a few months, and that's it. It's just going to go away by itself. While they're also talking about new stimuluses, which I still don't get. Sorry about that. I swore I was going to be calm today on today's show. But, even the word stimulus has its effect on me. And I promised my shrink I would, make sure and take my meds.
You often talk about open interest and forward contracts, futures contracts, and physical gold. I have absolutely no idea who owes what whom under these things and whether there's enough gold. And we don't have another GameStop event occurring where things just don't balance. Do you know anything about that?
Well, I don't know how much I know, but there's certainly a lot going on about that. I mean, in terms of the silver market has more bullish news the past 3 or 4 months than its history. There's talking about shortages, the Australian Mint, the U.S. Mint, the supply-demand situation, the government I mean, these banks, what I call the gold cartel, is keeping the price down through the paper market, which you referred to, say the COMEX, and it's helping to facilitate what they're doing. I think, and this past week especially, every time they knocked it down and came back, and I think they're finally running out of what I call physical supply to carry out their paper selling agenda, and all of a sudden their prices are going to explode. Now, for me, I don't know if we can get into it or not, but when silver gets to 30, it's going to 100.
I've said 120, but that's what I've said. I've said 120, 125.
I'll be a happy camper at 100, but it could go much higher than that.
One of the things that's going on that Bill and I talked about is sort of the balance sheet of pluses and longs, and whether we might be getting so imbalanced between paper gold and real gold and paper silver and real silver, and how do those things balance? Well, even he doesn't know. But here's what I'm going to tell you. I asked him, could this be another GameStop? And the answer was absolutely. As a matter of fact, he said they could go boom. And you know what? They will go boom. Because when you look at GameStop, it's already starting to march back up. It still isn't in balance. Okay, I thought, and I told you, and I was wrong about that this thing probably was, just going to be a, sort of a temporary event, but it isn't. And as a matter of fact, on the next chart, you're going to see just how untemporary this thing is. I cannot believe this. AMC, this is a 2-month chart, 1-hour intervals, and this thing has gone from like $10 all the way to 80 in like a week or two. These are hourly intervals. Okay, so it's in such short supply. It is so imbalanced that that in order to satisfy margin requirements on the New York Stock Exchange, either brokerage firms are buying people in, or the amount of stock by management has already been sold. Like I know in AMC, the management sold all their stock way back when it was pretty damn high, because it was worth nothing. Okay, if it wasn't worth anything then, it's not worth anything now. Gold, on the other hand, silver, on the other hand, are worth something. They're tangible. They've lasted 5,000 years. And if they get into some kind of supply-demand imbalance where there can't be deliveries and counterparties and things like that, you're going to have a financial explosion occur, because this world is interconnected. Okay? Interest rates and wage inflation, and you have to be balanced with what you can deliver and what you cannot deliver and who can deliver it, et cetera, et cetera. And this is setting up for a dramatic event, and we're not far. And I'm going to show you why we're not far. Bill said we're not far, and I'm going to show you exactly why this thing is coming down the pike very quickly.
I know that you're not a fan of paper precious metals. And can you tell me why? Can you tell our viewers why?
Well, I'm not a fan of GLD, which for gold, and SLV for silver, because many years ago when they first got started, I looked at who the custodians were of these entities. And for gold, the largest short at the time was the bank, HSBC. And for silver, it was JP Morgan Chase. And I said, what a coincidence that the two biggest shorts in the market, which was known, all of a sudden have this paper market in which, when you look at the details of what they can do and cannot do, are very vague. So I think whenever they need to have gold and silver to hit the market with, they take it from those two entities as one of the ways to suppress the price. So I wouldn't trust them as far as I could throw them.
Bill and I also talked about the reasons that paper gold, and what I mean by that are exchange-traded funds, like GLD is a very popular one, and why it represents so much danger. Now, it's been actually tracking gold pretty well. Like, for example, this is the real gold. I'm just probably put them in backwards, but it tracks it really well, and I have a table that's going to show you right there that they actually track well. But here's a problem. The problem is that you do not have that if this BIS thing should pass, and it looks like it is, because if you look at the rise in gold, and I'm going to go back one more thing here, but if you look at gold here, it has risen above the 50% retracement level and broken out from its pattern, and I believe that the market is anticipating the passage of it. Okay, And we should start seeing that. We see that in other ways, but we're going to start seeing that. Right now, it's tracked it well. So I've never had a real problem with it before. But I realize now that the kettle is starting to go build up, and the pressure's building up, and it's going to be real tough to it's going to be real tough to get out of this thing when it blows up. One of your risks is who your counterparties are. Can they deliver? You have so much flexibility. You don't own gold. That's bottom line. You don't own gold. You own a tracking vehicle which saves you from having to store it, and it's heavy. One of the reasons I'm not wild about coins personally, Bill suggested them, but one of the reasons I'm not wild about them is the weight. And so there are advantages to it. It trades quickly, and and here's the table that shows you that it's tracked it pretty well. Sometimes trades at a discount to net asset value, but you don't even know if they hold. You only know what they hold, what they say they hold, not necessarily what they hold. And should there be an insolvency caused by a failure to deliver by an institution that is too short, which is bound to happen, okay? You're not going to be able to take 1 ounce of gold out of this thing. I don't care how much you own, and this thing's going to be tied up in court for years. Not to mention the fact it's going to leave a lot of banks and a lot of financial institutions insolvent, and we're going to have the financial crisis of this century. Okay, the black swan event of this century. So up until now, it has done an okay job tracking, and that's what this table shows. So we've recommended in the past, double leveraged ETFs, and they've tracked well. They obviously they have a cost of the leverage itself, but they've tracked well. Okay, but the risks now are coming to the point where if you read the fine print, you're really talking about something that you could end up with something really not worth anything. And if you believe in gold, this may not give you that run that you really wanted. A couple other things to consider here are that Bill mentioned the custodians, HSBC, and he mentioned J.P. Morgan Chase. Well, J.P. Morgan Chase got fined not too long ago, $1 billion for rigging gold. There is a huge lawsuit out there that has been going on since 2004. There are other banks involved, and they basically are going to have a problem too, because somehow they're part of this whole bad guy network that Bill alluded to, and they're trying to keep the gold down for a reason. They're trying to keep the gold down because gold is like a thermometer. Bad times, it's sort of like what you would call a barometer of things getting bad. That's what Paul Volcker said, who was the best Fed chairman we ever had. He said, damn, I wish I'd never let gold go up to 850. That's what it took, the 20% interest rates that Bill alluded to in one of his segments. They had to raise rates so high to put the brakes on that it became really, really nasty. And that kind of thing just is so likely to happen today with all of the gold and all of the banks and all of the people that hold GLD that will not be able to deliver. It's nice that you don't have to store it anywhere, but on the other hand, you don't own any gold, so you might as well store the gold than own this. USO is an example of what can go wrong with an ETF. All right, it doesn't track a barrel of oil at all. This is a 5-year graph. I had to do 5 years to show you this because it had to have a 1-for-8 reverse stock split not too long ago, and the price of it, even with the 1-for-8 stock split, is recently $46, while West Texas Intermediate is trading at about 68. So if you actually factor in the 1-for-8 stock split, you would have bought it, on the opening, on the initial offering at about, whatever the price of gold was, and you'd have seen almost 95% of the value eroded. Eroded because of the way it's managed and because of the nature of these futures contracts. A little hard to explain, we'll explain it some other time, but I just want to show you when an ETF doesn't track, you really got problems. And at least gold has tracked reasonable. GLD has tracked. It may not, because these guys have had not necessarily counterparty problems. They've had futures markets problems where the futures markets and the cost of rolling one into the other. They don't actually have oil either. So they're using a lot of futures markets, and those are what are causing this to totally not track oil. I mean, right now we don't have $5 oil. We don't. And look how little it's rallied this year. Barely even gone up by comparison, and oil has gone up 800%. So this is an ETF gone wrong, and this is why you have to be careful of ETFs. Now, ones that track stocks, they don't have this, because stocks, you don't have a delivery issue. You have an exchange, a central exchange, and ETFs do not get regulated the same way that regular stocks do. They're just more convenient in some places. So, buyer beware.
So, in general, what would you favor if someone wants to ride the up escalator, and what is one of the greatest opportunities, I think I agree with you, of all time? What would you recommend? What would be the kind of things you'd want? Would it be miners? Would it be, just tell me, how would you play it? How would you recommend someone play it?
Well, it's a good question. It's complicated a bit because the premiums on some of the coins have gone bonkers because of what they've done. And yet they've held the COMEX, the basic prices of gold and silver down. They're just beginning, I think, to take off. And the shares, I know I have a brilliant guy in Toronto, who's a legend, John Embry, who's made a fortune trading the gold silver markets as a bank analyst, Royal Bank of Canada. He thinks this is the best buying opportunity for the gold silver shares he's ever seen in his whole life, and he's older than I am. So I think there's some fantastic.
Even older than me? Even older than me? I've been here since the dawn of mankind.
Okay, so with all the types of risks there are in these paper gold markets, and the weight of storing and all that, maybe a good way to play them would be through miners, which you do own a fractional share of the company, and you have them regulated, and they report and they audit, and they have real assets that are going to appreciate. All right, and First Majestic, which I said first Majestic on here because it's really first in my mind. This is a great recommendation, and this thing has gapped up in the last couple days, and it looks to me ready to sail away off into the sunset. And anybody that owns this thing is going to be very happy about it, I think. The other two that he mentioned, I didn't look at. One was under $1. Most people can't buy it under $1, so I didn't really take a long look at them, and I mostly focused on silver.
Now, what about like a Hecla Mining or a Coeur d'Alene or someone like that, a medium-sized one, or Wheaton that used to be, it's a big silver company? What about some of those? Any of those of interest to you?
Well, I don't follow them personally, but I have friends that do, and I know they're quality companies.
Now, I also asked Bill about a couple companies that I really like, and just see what he thought of them. And two were, one was Hecla Mining, which I really like. And the reason I like it is, you look at this chart, it is making new highs while silver's in that sideways pattern that just goes absolutely nowhere. And this thing is making new highs all the time, and you want to get stocks with relative strength. This is already broken out. Imagine what happens when silver inevitably breaks out of 30 and goes God knows where, bonkers. He said 100. I doubt it. I'm sorry, I disagree with you, Bill. It's going to be more like 250. And these guys also are leveraged to the price of silver, and they're good companies, and they have they have every possibility. They have grounds, they have resources, they have assets that are real and tangible. So that was one of the stocks I really like. That's my personal pick. And First Majestic is a great one. So good that I call it first. Maybe that was a little bit of my stuttering, in writing. I don't know, or it could have been my Tourette's. I don't know. You never know. I could have been, cable news could have come on by accident. You just never know. Ace sometimes steps on the remote control, and he steps on, like MSNBC or CNN or something like that, and I instantly go into seizure mode, and then he knows how to call 911, get the ambulance here, and restore me back to being mentally sound again, sort of mentally sound. Okay. This is another one I like called Core Mining. It used to be called Coeur d'Alene, and it too is broken out of what appears to be a triangle formation, which is a really positive one. If you look at that little spike, that was the good old Reddit rebels at play, marching uh, the price up, and that's one of the reasons they cost me so much damn money, because they kept creating false buy signals for me, and I acted on them, and then had to put my tail between my legs and run away, and they did that in a whole number of companies. I won't go into it, but they're you know they may just be amassing enough strength right now, in addition to this BIS thing that I talked about, the Bureau of International Settlements, to where phantom silver, phantom gold are no longer going to be counted. And that is a horrendous thing. So, with that, I want to say thank you very much for being here today. We're going to have an amazing show next week. I can tell you that next Saturday. It is going to be about the greatest scam in history, except it just got greater. It just got bigger. And those people that watch that show, and I hope you do, are going to save so much money and are going to understand why people like me are so determined to bring that kind of stuff to you. Okay? So thanks for being here. Thanks for watching. Please like and subscribe. We've got that incredible offer. Remember, it's gata.org. www.gata.org. It's free. You can get it for free. And who doesn't like free? I like free, most of the time. Milton Friedman said there's no such thing as a free lunch. Well, you can't eat one of those things, but it still is free. And it needs contributions and help from people like you and people like me. And I'm willing, like as I said, to help you, have access to the to the newsletter, because it is learning and understanding and making informed decisions and critical thinking are everything right now, because people just don't do it. They follow like blind sheep. And with that said, please like and subscribe, or as I would say in First Verse Majestic, please like, and subscribe. Like here, right here, and we will see you on Saturday. Thanks for tuning in.